Hello. Yeah. Now, very good morning, everyone. So today we'll take which accounting standard? AS5, AS5, AS7, AS9, 11, 18, and 25 if time permit. Okay. Chalo. So let us do the revision. So let us start with AS5. AS5 is what? Net profit or loss for the period, prior period item, and changes in accounting policy. However, in this chapter, the objective of this accounting standard is to understand the meaning and the disclosure of ordinary item, extraordinary item, prior period item, changes in accounting estimate, and changes in accounting policy. So this standard deals with the meaning as well as disclosure. Disclosure in where? In a statement of profit and loss. Means how to present such item in the statement of profit and loss. Understood? We all know that when we have done the schedule 3 format, so in SOPL, first we calculate profit, means income minus expense. So we calculate profit before exceptional item, extraordinary item, prior period item, and tax. Then first we do plus minus exceptional item. Then after that we'll do plus minus extraordinary item. Then we'll do plus minus prior period item. However, prior period item was not given in schedule 3. So I am just saying as per AS5. Correct now. And then we calculate profit before tax. Then after that we deduct tax expenses, which is now current tax and deferred tax. And then we calculate profit for the period. So we have understood that presentation part. This presentation, whatever we are doing in SOPA, is nothing but as per the requirement of AS5. But what are exceptional items? What are extraordinary items? What are prior period items, that we need to understand. And then we'll discuss about the changes in accounting policy and changes in accounting estimate. Correct. So you have understood the scope of this chapter. Now what is the meaning of ordinary activities? So ordinary activities are those activities which are undertaken as a part of business. So any activities which are undertaken as a part of business and which are incidental to business are ordinary activities. Correct. Means, can I say, if I am doing a business for providing coaching classes for CA, inter or final or foundation, so whatever income and expense I am incurring for these particular activities will be my ordinary activities. Means my rent expense will be ordinary expense. My tuition fee, whatever I am receiving, that will be ordinary income. Correct now, because this is related to what? As a part of is business, or which are incidental to main business. Can I say, due to business we need to incur some incidental expense. For example, some of the customer may file a case against me. You will not file a case against me, I know, but in other business customer may file a case. So in that case we need to pay some compensation to the customer for the breach of contract, etc. So that is incidental to business. Or can I say, we may pay some compensation to employee. So that is also incidental to business. So that will be also part of ordinary activities. Correct. So ordinary activities understood. Ordinary activity does not require any separate disclosure. So in SOP we write an income and expense. So income and expense are nothing but are related from ordinary activities. But what AS5 says that out of ordinary activities, some are exceptional items. Out of ordinary activities, some are exceptional items which require separate disclosure. So what are exceptional items? So what in AS5 says that when the item of income and expense within profit and loss from ordinary activities are of such size, nature or incidence. The keyword is was size, nature or incidence, such that their separate disclosure is required to understand the performance of the entity. Means if you will not disclose it separately, we will not be able to understand the performance of the entity, then that item will become exceptional item. A simple example I will take, the gain on sale of land and building. Can I say any gain or profit on sale of land and building? Normally, if suppose it is not an exceptional item, means nothing has been said about exceptional item, it will come in other income. So normally what we write down in this way, na? Is sales. Suppose sales of the company is 100 crore, and there is a on sale of gain on sale of PP is 20 crore. So total become 120 crore. And suppose there is an expense of 150 crore, or let us say 110 crore. So ultimately you can say there is a profit of how much? 10 crore. But if you try to understand the performance of the entity, so from the operation of business there is a loss. You can see 100 minus 110, so there is a loss of what? 10 crore. So it become profit because of what? Gain on sale of land and building, which is not of recurring nature, means it is of that nature which will not happen every year. So can I say for this a separate disclosure is required to understand the performance of an entity, means user will not be able to understand it is a profit making or loss making. So actually we should disclose in this way, 100 then minus 110, there is a loss of what? 10 crore, and then we should disclose this as an exceptional item 20 crore. So ultimately your profit remain 10, but can you see if you present in this way, user can understand that profit from operation is what? Actually a loss, that is 10 crore, and it become profit only because of exceptional item. Understood? So what is the definition? When the item of income and expense within profit or loss from ordinary activities are of such size, nature or incidence that their disclosure is relevant to explain the performance of the entity, then such item will become exceptional item, and the nature and amount of such items should be disclosed separately. Now AS5 has given some examples of exceptional item which may be important from examination point of view, means they can ask you in MCQ format or whatever, which are exceptional, which are not exceptional. So exceptional item they have given the write down of inventory to NRB or reversal of such write down is an exceptional item. When you write down some inventory to NRB, that is an exceptional item if the amount is material. A restructuring of the activities of entity and the reversal of any provision. Suppose you have created provision for restructuring or you have reversed that provision, that will be also an exceptional item. Disposal of item of PP, any disposal of item of PP, any gain or loss on sale of PP, any gain or loss on sale of long-term investment, that will be also an exceptional item. Any legislative changes having retrospective effect application, means due to some changes in the act there might be some expense or income for that particular period, that is also what? Exceptional item. Any litigation settlement, you have done some settlement for litigation etc., that will also become an exceptional item. Or any reversal of provision, any other reversal of provision will be also an exceptional item. This creation of provision is not exceptional, but if you reverse that provision, that will become a exceptional item if the amount is material. Understood? Exceptional item. Correct? Yes sir. Now what do you mean by extraordinary item? So extraordinary item are those items which are not ordinary item, which are not immaterial, and which are not expected to occur frequently. Correct? These three conditions, if these three conditions satisfied, so any activities will become extraordinary activities. So any extraordinary item are the item of income and expense which arises from the event or transaction that are distinct from ordinary activities of the business, which are not related to business, which are material means which are not immaterial, which are material, and which are not expected to occur frequently. So what AS5 says that if any item of income and expense are extraordinary, so that should be disclosed separately so that its impact on the current year profit can be perceived. What is the key word? Is to be disclosed separately in SOPL so that its impact on current profit or loss can be perceived, can be clearly perceived, it can be understood. Therefore, we disclose after exceptional item, we write down extraordinary item so that its impact on the current year profit can be determined. Understood? Yes, sir. Examples what? Example can be any loss due to fire, any loss due to earthquake. That are examples of what? Extraordinary activities which are not related to business or incidental to business. So fire is not incidental to business now. So anything happen which are not incidental to business are what? Extraordinary. Correct. Then coming to prior period item, in simple word I will say prior period item are error. Prior period item are error. So any income and expense which arises in the current period, as a result of error or omission in the preparation of financial statement of one or more prior years. So that was because of some error in prior year but arises in current year. Are you getting what I am saying? Means if suppose if I say in this way, just try to understand. This is what? Last year. This is what? Current year. And this is the date of approval. Without any error, this error identified in this period, but it is an error, it is not an error. Means error of this year identified during this period is not an error. Why? Because it become an adjusting event which will be automatically adjusted. If you have not adjusted, then it become a error. But any error which is identified here, so it become an error and it is covered under AS5. It is covered under AS5. Yes, sir. Very good. Understood. So simply prior period item, those income and expense which arises in the current period as a result of error or omission in one or more prior year also require separate disclosure in SOPs so that its impact in the current year profit can be perceived. Similar treatment as we have done for extraordinary activities. Chalega? Yes, sir. So prior period item you have understood. However, there is one very important question they used to ask in example in exam. They will say like this: there was one manager whose salary was increased in the current year. Whose salary was increased in the current year with effect from what? Beginning of previous year. Correct? So if salary was increased in current year, this is the current year, with the beginning of previous year. So there will be some area of previous year. So suppose area of previous year is 10,012. So whether this is an error or it is not an error? It is not an error because this arises in current year but not because of error or omission in the prior year financial statement. This is an item of current year only. It can be ordinary or maximum it can be exceptional if the size, nature, incidence are of such that whose separate is required to understand the performance of the entity. But if nothing is given, always consider it as an ordinary item. Understood this point? Yes, sir. The next point is changes in accounting estimate. So changes in accounting estimate means what? We make a lot of accounting estimate for the preparation of financial statement. For example, depreciation calculation is an accounting estimate which is based on the estimation of useful life, estimation of residual value, depreciation method. So if that is changed, so that becomes changes in accounting estimate. If that is changed, so that becomes changes in accounting estimate. So whenever there is changes in accounting estimate, so any change should be disclosed separately. Any changes should be disclosed means the effect of such changes require separate disclosure. So changes in accounting estimate means estimate has been revised. Your previous estimate has been revised due to changed circumstances or changed condition on which estimation was made or as a result of new information, more experience or new development. Correct? For example, provision whatever you have created require reassessment every year due to new information obtained, due to new development, etc. That is also changes in accounting estimate. Disclosure. The effect of changes in the accounting estimate should be included in the SOPL of the period of change if the change affects only that year, or of the period of change of future year if the change affects both years. Correct? So the period of change if the change affects the period only, or the period of change and future period if the change affects both. Understood? Correct. So very simple. The effect of change in accounting estimates should be included in SOPL. Correct? Now, what they want to say, if it is impracticable to quantify the amount, suppose you are not able to estimate the amount of what change, effect of change then fact need to be disclosed. Then we should disclose the fact that we are nalayak, we are not able to determine it. Understood? Don't write nalayak in exam. Okay? Correct? Understood this much? 1 minute. Okay. Now, sometime what happened? We have not an accounting policy, but sometime what happens, it is not possible to distinguish between changes in accounting estimate or changes in accounting policy. So what AS5 says that in that circumstances, always assume that it is changes in accounting estimate. Changes in accounting estimate. Correct? Yes, sir. Now coming to changes in accounting policy, what do you mean by accounting policy? So accounting policy are specific accounting principle and method of applying that principle in the preparation and presentation of financial statement. Means it is nothing but accounting policy and accounting method. So when I say accounting policy and accounting method, in sum total will become what? Accounting principle and accounting method will become accounting policy. For example, in simple word, inventory, what is the accounting principle? Accounting principle for measurement is what? Cost price or NRB, which is lower, and the method is what? Cost formula, that is specific identification method, cost formula, weighted average price method, FIFO, standard costing. This become the cost formula to find out the cost price, So any changes in principle or any changes in accounting method will result in what? Changes in accounting policy. Understood? Now the question is that can we change the accounting policy? Well, yes, under 3 circumstances. We can change our accounting policy. Yes, but under 3 circumstances. First, when changes required by law, or when changes required by accounting standard, or for any better presentation of financial statement. So if the changes are required by statute, or for compliance with any accounting standard, or when it is considered a change will result in more appropriate presentation of the financial statement. In these circumstances, we can change. Understood? Okay, the first two is nothing but mandatory change. The third one is nothing but voluntary change, because that depend upon the management discretion whether they want to change or they do not want to change. But for compliance of law and for compliance of accounting standards, this become a mandatory change. Now, whenever there is changes in accounting policy, any change in accounting policy which has a material effect should be disclosed in the financial statement of the period in which such changes are made. Means disclosure should be given in the year in which such changes are made. Where the effect of such change is not determinable, the fact need to be disclosed. We should disclose the fact. Correct? If the effect of change has no material effect in current period, but has a material effect in future later period, then also the fact need to be disclosed in the current period regarding the changes in accounting policy. So whatever accounting policy you have changed, if that change will affect your future period, not current period, then also you should disclose the fact that in current year we have done some changes in accounting policy. Understood? Have you understood? So the fact of such change should be disclosed in the period of change. Got this point? Now, this point number C may be important from examination point of view. This following are not a change in accounting policy. It seems they are change in accounting policy, but they are not change in accounting policy. Some clarification has been given. So first is what? The adoption of an accounting policy for transaction that are differ in substance from previous transaction. Means which differ in substance from previous transaction. For example, I will just give an example. Initially you have taken car, and that car means you are a trader of car, you are a dealer of car. So some car you are using for rental purpose. So initially it was PP. So AS10 will be applicable. But after some time that car was ceased to be given on rent and now held for sale in the ordinary course of business. So now it become inventory. So it will be classified from PP to inventory. Yes or no? Same thing we have done in AS10. It will be classified as carrying amount. But now AS2 will be applicable. So changes in accounting policy, but it is not changes in accounting policy because it differs in substance from the previous transaction. Previously it was PP, now it become what? Inventory. So of course we need to change it, but it is not changes in accounting policy. Understood? Correct. Say, second point, the adoption of new accounting policy for a transaction which do not occur previously. Of course, if previously there was no such transaction and new transaction came in current year, so of course we'll adopt new accounting policy. So this is not a changes in accounting policy. Third one, the adoption of new accounting policy for transaction which were immaterial previously. It was immaterial. Now it become material. So for immaterial, we do not apply accounting standard. So there was no such accounting treatment. So we are doing accounting, we are applying accounting treatment as per what generally acceptable accounting practice. For example, calculator. We purchase calculator. So it is immaterial. So there is no need to apply AS10 now. This calculator can be charged to PL as an expense. But suppose in current year, this calculator, whatever calculator, this become material. Suppose. So now you need to apply AS10. So you are changing the accounting treatment. So these changes will not be a changes in accounting policy. I've just given one example. I hope you have understood. Yes, sir. So this can be important from examination point of view. Correct. Done. AS5 done. So normally in AS5 they will ask you a question. So first you need to identify whether it is what and then give the disclosure requirement. This type of question they will ask. Okay, sir. Yes, sir. Chalo. Done. Now let us come to AS9. AS9 is revenue recognition. Revenue recognition important also from exam point of view. So what do you mean by revenue? Revenue means what? Gross inflow of cash or receivable or any other consideration arising from ordinary activity, from sale of goods, rendering of services, or from use of enterprise resources by other, yielding interest, dividend or royalty. Correct? This is the definition of revenue. So revenue is a gross inflow of cash, means it can be cash transaction. Receivable means it can be credit transaction. Other consideration, it can be exchange transaction arising in the course of ordinary activities. Now you know understood ordinary activities of an entity from sale of goods, rendering of services, use of enterprise resources, yielding interest, royalty or dividend income. Correct. Now this is a gross inflow. So it should be gross inflow. So one clarification has been given that trade discount is always deducted from amount invoice price to find out gross inflow. Understood now? Suppose the 100 is the invoice price and 10% discount. So 90, this 90 is gross inflow. So revenue is 90, not 100. So don't be confused with trade discount. So trade discount and volume rebate given should be always deducted in determining revenue. Correct. So sometime what happened? We collect some amount on behalf of third party. For example, GST, etc. So suppose you collected 10% GST, so you collected 110 from the customer. So in this case, gross inflow will be what? The amount other than amount collected on behalf of third party. Correct? That will not be the amount of revenue. So one again clarification has been given. Entity shall exclude from revenue all amount collected on behalf of third party such as GST, etc. Correct? Understood? Now you all know in case of agency relationship, means in case of agency or consignment arrangement, the consignee revenue is not gross inflow. The consignee revenue is only what? The commission amount. So a clarification has been given that in case of agency relationship, entity shall include in revenue only the amount of his commission. Means agent will only include commission as what? Revenue. The amount collected on behalf of principal are not the revenue of the entity. That will become the revenue of principal. That will become the revenue of principal. Understood? So these are some clarification has been given about the gross inflow. Understood? Now we need to understand what will be the condition for recognition of revenue from sale of goods. What are the conditions for recognition of revenue from rendering of services and from interest, royalty and dividend income. Means what is the objective of this chapter? Objective of this chapter to identify the timing of revenue recognition, means when to recognize the revenue, So objective is what? Timing of recognition, correct. Now let us first come to revenue from sale of goods. Correct. So revenue from sale of goods is recognized when all the following conditions are satisfied. They have given how many conditions? 3 conditions. Out of that 2 conditions means these two are actually one condition. I have combined this. The last 2 conditions is always same for all revenue recognition. The last 2 condition is always same for all revenue recognition, whether it is revenue from sale of goods or rendering from services or use of enterprise resources by other. These 2 conditions will be same for all. So first let us do these 2 conditions. The first condition means this condition what there is no significant uncertainty regarding the amount of consideration. Means can you say the amount is known to us? Amount is known to us. So there is no significant uncertainty exists regarding the amount of consideration. Second is what? It is not unreasonable to expect ultimate collection. Means there is a certainty of collection also. It is not unreasonable to expect ultimate collection. So in exam, don't write down it is there must be certainty of collection, because when you say certainty of collection, that has some different meaning, and when you say it is not unreasonable to expect ultimate collection, that has some other meaning. For example, you have done credit sales. Suppose you have done credit sales. Whether there is any certainty of collection? No. But whether there is no certainty of collection, then also answer is no. So what they say in this case, there is no uncertainty regarding the amount of collection because you have done sale to known customer. In future the circumstances may change. The circumstances may change. The good debtor may become bad debtor. But as on current scenario, we are expecting ultimate collection. Understood? Correct. So it is not unreasonable to expect ultimate collection, and there is no significant uncertainty regarding the amount of consideration. These 2 points will be always same for all revenue recognition. Correct. Now what is the first point? That seller has transferred the ownership in goods to the buyer for consideration. So ownership in goods has been transferred, or significant risk and reward incidental to ownership has been transferred to the buyer. Can you say with ownership always risk and reward is transferred? So normally when I am saying ownership is transferred, it means risk and reward has been transferred. But sometimes risk and reward has been transferred without ownership. So in that case, which is more powerful word? Means what is a more powerful condition? Risk and reward. Because with ownership, so always risk and reward has been transferred. Means if I will say I have transferred the ownership of this mobile to you, it means the entire risk, entire reward of this mobile has been transferred to you. But sometime what happened? Even though I have not transferred the ownership, but I may transfer the risk and reward of this to you. So in that case also it is the sale of goods. Correct. Now so the prime condition is what? The transfer of risk and reward of ownership has been transferred to the buyer. Understood? Correct. And of course with this the seller retain no effective control of the good transfer. Can I say if risk and reward is transferred, it means that control has been also transferred. If the control has not been transferred, means risk and reward has not been transferred. In simple word now. So if I am saying risk and reward is transferred, it means control has been also transferred. Control has been also transferred. Sometime what happened? Just try to understand. Suppose I have prepared one invoice, but goods has not been delivered to customer. Quite possible. Goods has not been delivered to the customer. Quite possible. There may be some reason. Means invoice prepared, but goods has not been delivered to the customer. Now there can be 2 circumstances. Either goods has not been delivered because of seller intention. It means risk and reward has not been transferred. But goods has not been delivered as per the request of buyer, and we are holding goods on behalf of what? Buyer. It means it is not under our control, because goods we are right now holding on behalf of customer. It means control has been transferred even though you are holding, and even though you are holding, risk and reward has been transferred. Now if something happened to that good, it is a loss of what? Customer only, because we are holding as per the request of what? Customer. We don't have intention to hold, but we are holding only because of request of customer. In that case, risk and reward is transferred. So I will say this second point is also related to this only. The prime condition is what? All the significant risk and reward incidental to ownership has been transferred to buyer. With ownership always risk and reward will be also transferred. With ownership always risk and reward will be also transferred. Understood? Correct. Understood this point? This is given. Now there are some special guidance. Let us do one by one. Normally in exam question will be asked from the special guidance. So you need to write down with this condition, you need to also mention the special point. So first we need to write down these three conditions and then write down about the special guidance. Correct? So first guidance already we have done, the delivery is delayed at buyer request and buyer take the title and accepting the billing. Means they have accept the bill. Means there is invoice transfer, ownership transfer. Now the question is that till now the goods has not been transferred. So what AS9 says that the risk and reward will be transferred if three conditions are satisfied. The item must be on hand. Item must be on hand. Item must be identified. It has been identified that that item belongs to the customer, and item must be ready for delivery. If all these three conditions is existing on the date of billing or invoicing, it means risk and reward has been transferred, control has been transferred, revenue should be recognized. Revenue should be recognized even though you are holding, means the seller is holding goods on behalf of customer. Correct? Understood these three conditions. In exam you should write down these three conditions. If you are not writing these three conditions, they will not give marks. Then goods are sold subject to installation and inspection. So goods are sold subject to installation. The question, we you purchase AC. Now AC is subject to installation. So can you say normally in this case revenue recognized only after installation only? Correct. So revenue should normally recognize when the customer accept the delivery and installation and inspection has been completed. Means till now if installation not completed, revenue cannot be recognized because it is subject to what? Installation. It is subject to installation. Understood? Sometime what happen, installation is very easy, simple installation, means which can be done by customer. Are you getting? So even though it is subject to installation, but can I say in that case installation was not required, it can be done by whom? Customer only now. So in that case revenue recognized once buyer accept the delivery. Once the buyer accept the delivery. If it is easy, for complicated installation, because AC so we can't install it, because that sir, the technical person will come, he will jump and pata nahi kahan kahan. So that we can't do na. Understood? That is not our job. So in that case we need to wait for what? Installation. Chalega? Yes sir. Goods sold on approval basis. Goods sold on approval basis. So in that case revenue can be recognized when three conditions are satisfied. When any one of the three conditions are satisfied, any one, or what it is given, when goods have been accepted by the buyer. Accepted means they acknowledge that yes, we have accepted it, or the buyer has done any act adopting the transaction, means suppose they started using it, so it means they have adopted a transaction, or the time period for rejection has been expired and till now it has not been returned, so it means they want to use it, so it means control has been transferred. So in case any one condition is satisfied, revenue should be recognized. Then consignment sale. So revenue should be recognized only when goods are sold to the third party. Goods are sold by consignee to the third party. Then only revenue should be recognized in the books of principal, in the books of consignor, in the books of consignor. Cash on delivery sale. So when cash are collected, so revenue should be recognized only when cash is received by the seller or his agent. Special order and shipment. Suppose some special order I have received, as per the specification given by the customer. Means we normally do not do such type of manufacturing. We do manufacturing only after receiving some special order. So in that case, revenue should be recognized when goods are manufactured. When goods are manufactured, goods are identified and ready for delivery. Once it is ready for delivery, because already we received the order, already invoice has been prepared, it should be recognized as revenue. Understood? Correct. Then sale or repurchase agreement. This is the very important. You remember the sale or repurchase agreement? Sale or repurchase agreement means in that case what happened? On the date of sale, one repurchase agreement will be entered. So sale was then at rupees 1 lakh and it will be repurchased at rupees 1,20,000. 1,21,000 कर दो, 1,21,000 after 2 years. Understood? So can you say because sale and repurchase agreement for the same goods has been either at the same time or near the same time. It means there is no intention to sell because they want to repurchase it. Correct now. Therefore, control of that good has not been transferred. Therefore, no revenue will be recognized. So, whatever consideration you have received initially, that will be a liability. That will be a liability means loan. So, first, what journal entry will do? Bank account debit to loan. Loan. By what consideration received? Consideration received. And this 21,000 will become interest over how many years? 2 years. Correct now. So basically they will give the rate of interest also, suppose 10%. So first year interest will be what? 10,000. What journal entry you will do? Interest expense account debit to loan. How much? 10,000. Then once again interest expense account debit to loan. Second year. You can transfer to PL. PL journal entry you can do now. Once again now it will be 11,000. Because 1,10,000 into 10%, 11,000, and you can see the amount payable become 1,21,000. So on repurchase date, will pass one journal entry loan account debit to pay loan account debit to bank 1,21,000. So can you see the difference between these two will be recognized as an interest expense over the period of contract, means between sale date and repurchase date. Understood? So this can be one question which can be asked in exam, popular question, sale and repurchase agreement. So for such transactions that are in substance a financing agreement, the resulting cash inflow is not revenue as defined and should not be recognized as revenue. Correct. Then sale to intermediate parties, when goods are sold to distributor, dealer or other for resale. Sometimes we sell to what? Intermediate party, and the intermediate party will sell to what? The end customer. So can I say intermediate party is an agent, then we should not recognize revenue. But if they are not an agent, it means control of the goods has been transferred. So we need to first find out that intermediate party is an agent or is not an agent. Agent or not an agent. Understood? The revenue from such sale are generally recognized if the significant risk and reward has been transferred to the intermediate party. So it means they are not an agent. They are not an agent. However, in some situations, the buyer may in substance be an agent, and in such case, the sale should be treated as consignment sale. Understood what I am saying? So simply, you need to identify whether intermediate party is an agent or not an agent. If it is not an agent, it means risk and reward has been transferred. Agent means risk and reward has not been transferred. Chalega? Yes, sir. Then subscription for publication. Subscription for publication means there is some newspaper for which normally we do subscription basis, sale on subscription basis. In that case, revenue received should be deferred, because can I say it is for 1 year or 2 year or 3 year or 5 year. So we can't recognize entire revenue in this year if the subscription amount has been received for 2 or more than 2 years. So it will be deferred and considered as advance and recognized on a straight line basis over the period of time. Straight line basis over the period of time. So suppose it is for 24 months, divide by 24. 36 months, divide by 36. Understood? Yes, sir. Done. Installment sale means what? Installment sale means what? Whenever we are receiving installment, correct? So whenever the consideration is receivable installment, so can I say the sale amount will be inclusive of interest? Because installment will be inclusive of interest. So we should find out actually present value of all the installment. The present value of all the installment will become what? Cash price. That amount we should recognize as revenue. So what they are saying, whenever consideration is receivable in installment, revenue attributable to the sale price exclusive of interest should be recognized at the date of sale. So now you know the concept of present value. So we can say revenue should be what? Present value of all future installment. We can say in this way now. Correct. So revenue will be present value of all future installments. Installment will be given, rate of interest will be given. You can find out a present value. That will be the amount of revenue. That will be the amount of revenue. And any difference between revenue and future installment will be what? Interest income. That will be recognized on systematic basis. Correct. So interest elements will be recognized as revenue proportionately to the unpaid balance due to the seller. So every year we recognize what? Interest income. Chalega? Yes. Then coming to rendering of services. Rendering of services. So in case of rendering of services, revenue should be recognized when once again three conditions are satisfied, two conditions are same. So first, can you give me that two condition? There is no significant uncertainty existing regarding the amount of consideration, and it is not unreasonable to expect ultimate collection. Now the first condition, what they said, ki revenue should be recognized when the service has been performed. When the service has been performed. Now service can be performed two ways. Either the service might have some multiple act, or it may have only single act. So single act means what? Revenue should be recognized only once the entire act is completed. So normally we use completed service contract method. But it has multiple act, act 1, act 2, act 3, act 4. So in that case, can I say we should recognize revenue as and when proportionate act has been performed? Proportionate act has been performed. So the act which has been performed, we should recognize the revenue to that extent. So we use proportionate completion method. We use proportionate completion method. Are you able to understand? For example, I am providing services. So today one lecture completed. So my one act completed. So I should recognize to the extent of this much hour. So suppose I am delivering 300 hours to teach you advanced accounting. So today I have completed 3 hours. So I should recognize the revenue for how many hours? 3 hours. Yes or no? So I will do proportionate completion method. Proportionate completion method. So revenue from service is generally recognized when the services are performed. Revenue should be recognized either under completed service contract method or under proportionate completion method. Understood? So this will depend upon the information given in the question. Normally they ask proportionate only because that is more interesting question. So that will depend upon the information given in the question when that act is completed. So once that act is completed, that much revenue will be recognized. Understood? Now there are some special guidance. First is installation fee. Installation fee. So suppose we are doing installation, we are providing some installation services. So when the revenue recognized, when the installation is completed, once the installation is completed, the revenue should be recognized as revenue only when the equipment is installed and accepted by the customer. For advertising commission, when the advertisement is appear to the public, then commission income will be recognized. So commission income will not be recognized when the related advertisement or commercial appear before the public. I think this type of question we have done in the class also. When such advertisement appear to the public, Insurance agency commission. Insurance agency commission. So there are two. Means one is what known as the commencement renewal, commencement insurance, and then renewal also. Correct. So commission should be recognized on the effective commencement date or renewal date of related policy, because for every renewal also they get commission. So they will get commission on new policy and for renewal also. So can you say on effective date of commencement of policy or renewal date of that policy? On that date, commission income should be recognized. Financial service commission. Financial service commission means what? Suppose you are arranging loan for some other party. So if you are arranging loan for some other party, so you are getting some commission on that. So that commission income will recognize when the loan has been granted, when the loan has been availed, granted. Understood? Admission fee, school may admission fee. So revenue from admission fee, it can be due to any artistic performance, banquet, or other special event, should be recognized only when the event takes place. Correct now? So that is admission fee. Admission fee means for any event you are paying some fees for admission. So when that event takes place, revenue should be recognized. Tuition fee, revenue should be recognized over the period of tuition. I mean, right now I said over the period of tuition on proportionate completion method. Understood? So these are some guidelines. These guidelines you need to follow from examination point of view. Normally I have seen in exam they have asked only this point number 2 till now. So normally they ask from sale of goods, but it does not mean they cannot ask from rendering of services. So rendering of services till now I think advertisement commission wala point they have asked. Chalega? Yes sir. Then use of other used by other of enterprise resources yielding interest, royalty or dividend income. Once again, that two condition is common. Means the two condition is nothing but no significant uncertainty as per measurability or collectability. Means second condition was actually for measurement, amount of consideration, and third condition was for collection. So there is no significant uncertainty regarding a measurement or collection. Correct. And then they have given some primary condition. So for interest, it will be recognized on time proportionate basis on accrual basis. So it will be recognized on time proportionate basis considering the amount outstanding and the rate applicable on time proportionate basis. So if you have done some investment, etc. for 3 months, so you need to recognize interest income for 3 months on time proportionate basis. Royalty income is to be recognized on accrual basis as per the terms of agreement. On accrual basis as per the terms of agreement. Okay. Dividend income is recognized when the right to receive dividend payment is established. Means when the dividend is declared. Now we know that final dividend declared on approval of shareholders. Interim dividend declared on approval of board of directors. Understood? Yes, sir. This is very simple. I think you have understood. Then the effect of uncertainties on revenue recognition. Uncertainties means we have discussed about uncertainty regarding the measurement and collection. So if suppose on initial recognition there is some uncertainty regarding the measurement of amount or for collection of amount, so we should not recognize revenue. We should postpone the revenue recognition. We should postpone the revenue recognition, and when that condition is satisfied, at that point of time revenue should be recognized. At that point revenue should be recognized. So when I am saying that condition is not satisfied, it does not mean we will not recognize revenue. We will recognize revenue, but right now we will not recognize revenue. We will postpone the revenue recognition. Even though amount has been received, if the amount has been received, that will be considered as what? Liability. But will not recognize the revenue. Understood what I am saying? Have you understood? So in such case, it may be appropriate to recognize revenue only when it is reasonably certain that ultimate collection will be made. Okay. When there is no uncertainty as to the ultimate collection, revenue recognized at the time of sale or rendering of services. When recognition of revenue is postponed due to the effect of uncertainties, it is considered as revenue of the period in which it is properly recognized. Means it will become revenue of the year in which it is recognized. Okay. Then subsequent uncertainty of collection. Sometime what happened ki on initial recognition there was certainty of collection, therefore we have recognized the revenue. But subsequently it become uncertain. Quite possible good data become bad data. So subsequently it become a uncertain. Correct. In that case, what AS9 says that whatever adjustment you are doing, you should not do adjustment with revenue already recognized. A separate provision should be created for that subsequent uncertainty. For example, we create a separate provision for bad and doubtful debt. So a separate provision should be created for subsequent uncertainty. Correct. So when uncertainty of collection of revenue arises subsequently after the revenue recognition, it is better to make a provision for uncertainty in collection rather than adjustment in the already recognized revenue. So we should not adjust the amount of revenue already recognized. Chalega. This may be important from exam point of view. Understood? Correct. Now normally in this very important question, they are popular question. They will give you that we have taken loan. Suppose we have done a credit sale. They will give you this type of question. We have done credit sales, and in the invoice it is mentioned that on delayed payment there will be interest and the customer defaulted. So customer defaulted, the interest will be charged. Can we recognize the interest revenue? No, because there is no, it is not reasonable to expect ultimate collection, because from customer, if you demand interest, normally we do not demand interest even though what? There is delay. So normally it will be recognized revenue only when there is an ultimate collection. Then we should recognize revenue, otherwise will not recognize such revenue. Understood? So this is one popular question from exam point of view. Now coming to scope, this standard does not deal with the following income. The following income is not covered in this chapter. For example, revenue arising from construction contract. For this AS7 is applicable. Revenue arising from hire purchase and lease agreement. For this AS19 is there. Revenue arising from government grant. For this AS12 is there. Revenue from insurance company. For this no accounting standard. Correct. So this will do in AS7, this will do in AS19, this will do in AS12. Then they have given a clarification. Examples of item not included within the definition of revenue. So these are the examples which are not revenue. Means arises from ordinary activities but are not revenue. So they have given some clarifications. For example, realized gain resulting from disposal of PP etc. Any realized gain. Any unrealized gain resulting from holding of PP etc. For example, revaluation gain is not revenue. Unrealized holding gain resulting from changes in the value of current asset means inventory. So unrealized gain from holding inventory, that is also not revenue. Realized or unrealized gain resulting from changes in foreign exchange rate, that is also not revenue. Realized gain resulting from discharge of obligation at less than its carrying amount, means if you are settling a liability in less than carrying amount, that is also not a revenue. So they have given some clarification. Or restatement of carrying amount of an obligation. If you have restated a carrying amount of a obligation, that is also not a revenue. That unrealized gain will be also not a revenue. Understood? So these are some clarifications. This can be asked in what? MCQ format. Whether these are revenue or not revenue. Chalega? Understood. Disclosure requirement is very simple. You can read by your own. With this AS9 completed. Correct? Understood? Can we come to one more AS? AS7. Now, AS7 is for what? Construction contract. Construction contract. So, any revenue from construction contract is covered in AS7, it is not covered in AS9. So, what do you mean by construction contract? So, construction contract is a contract for the construction of an asset or group of assets. Of a single asset or group of assets. Group of assets means what? That are closely interrelated or interdependent in terms of design, technology or function. Then that group of assets will be one construction contract. Understood? So, either it is a construction of one asset or group of assets. However, they have given some clarification that contract for rendering of services which are directly related to the construction of asset will be also covered in AS7. But any contract of services which are not directly related to the construction contract is not covered in AS7, that is covered in AS9. Correct? Okay. So what is the keyword? Directly related to the construction of asset. For example, you are doing construction of asset building. With that construction, you have also given service contract for interior designing. So in that case, it is directly related to construction of building. Therefore, it will be covered in AS7. Then contract for destruction of asset. Any contract for destruction of asset will be also covered in AS7. So construction will include destruction also. It will also include restoration of asset. The restoration means first destruction, then construction. So that will be also covered in AS7. Okay. Understood? Now coming to this topic, now AS7 deals with what? Revenue. Revenue from construction contract. For that purpose, what AS7 has done, they have divided all the construction contract into two types. Correct? For the purpose of revenue recognition. Okay. First is, if outcome of construction contract can be measured reliably. Can be measured reliably. Outcome is what? Profit or loss. Can be measured reliably. Or if outcome cannot be measured reliably. Understood this point? Correct. Now, if the outcome can be measured reliably, they have given one method, percentage of completion method. They have given which method? Percentage of completion method will be applicable for revenue recognition. If outcome cannot be measured, so it means percentage of completion method is not applicable. It is not applicable. Okay. Now in this case, what they have said, the revenue will be equal to, revenue recognized will be equal to total revenue multiplied by percentage of work performed, percentage of stage of completion, we can say percentage of stage of completion. This will be revenue recognized. Correct. From this we deduct less actual cost incurred during that year. Actual cost incurred during that year. Understood? Correct. And this will be what? Profit or loss up to a reporting date. Now this basically we calculate on cumulative basis. I will suggest you to calculate on cumulative basis. Cumulative basis means what? If it is year 1, so first calculate only for year 1. If it is year 2, then calculate for year 1 plus year 2. Means this profit is for what? Cumulative year. So from this we deduct profit or loss recognized during prior year. So this will be profit or loss of current year. Understood? Have you understood this? Now AS7 says that there is one para 35 of AS7. Para 35 you remember. So para 35 of AS7 says that if the total contract cost is more than total contract revenue, then there is a loss, expected loss. So we call it what? Total foreseeable loss. From this we deduct loss already recognized, and for the balance we will create provision for expected loss. Provision for expected loss. Understood this point? This provision for expected loss will be also recognized in PL. I am just giving from examination point of what we are supposed to do. Now this stage of completion will be calculated by using what? Cost to cost method. We apply cost to cost method on cumulative basis. So that is what? Actual cost incurred cumulative. Cumulative means up to reporting date divided by total estimated cost into 100. Correct now? Understood. Now this total estimated cost is what? Actual cost incurred up to reporting date plus cost to estimated cost to complete. This is estimated cost to complete. We call it cost to cost method. However, there are some other methods also given, for example, surveyor method, physical proportion method, but that is not used from examination point of view. Okay, sir? Have you understood this much? Now, when the outcome cannot be measured reliably, in this case revenue will be equal to recoverable cost. Recoverable cost means cost to the extent they are recoverable. Okay. Then we'll do less actual cost incurred. Actual cost will be both recoverable plus non-recoverable. Non-recoverable, non-reimbursable means which cannot be recovered from customer. Non-recoverable. Are you getting what I am saying? So it means there cannot be any profit. There can be loss. Whenever outcome cannot be measured, so we become thora conservative. We don't recognize profit, we recognize only loss. And therefore revenue should be recognized to the extent of costs incurred which are recoverable. Understood? Correct. And we should create provision for future non-recoverable cost. For that we will create provision. Understood? I am just giving a synopsis of this chapter. Understood? Till now this type of question has not been asked in exam. So if they ask, you can do it. चलेगा. Done? Chalo. Now let us read the AS7. Now come to types of construction contract. So for revenue recognition, the construction contract have two types. One is fixed price contract, one is cost plus contract. Fixed price contract means what? When the contract price is fixed in consideration, means it is fixed per output. Understood? But when I am saying cost plus contract, it becomes variable. So it will be cost incurred plus some reasonable profit margin. That becomes cost plus contract. Understood? So a cost plus contract is a construction contract in which contractor is reimbursed for the defined cost plus a suitable profit margin. Now recognition of contract revenue depends upon whether outcome of construction contract can be estimated reliably or when the outcome of construction contract cannot be estimated reliably. Cannot be estimated reliably. Correct now? Okay. For this we will apply percentage of completion method. For this percentage of completion method is not applied. Chalega. Now factor determining the reliability of outcome. So what are the factor which will determine whether the outcome is reliable or not reliable? That will depend upon the following factor. First, total contract revenue can be measured reliably. Both the estimated contract cost and stage of contract completion can be measured reliably. Contract cost attributable to contract can be clearly identified. Can you see, if you can identify all this, then only we can measure the outcome. Means whether there will be overall profit or loss, then only we can measure. So suppose if you can't measure the contract revenue, it means we don't know whether the outcome is profit or loss. In that situation, we'll apply what? Will not apply percentage of completion method. So now what is percentage of completion method? So percentage of completion method means what? Revenue will recognize as and when work is performed. As and when work is performed. The following steps will be applied. First, determine contract revenue. Now contract revenue means initial agreed amount of revenue plus any variation plus any claim plus any incentive or minus if any penalty is there. So it means it will also include variation in the work, any claims or any incentive in the payment. That will be also included in the amount of revenue. But can I say variation, claims and incentive will be included only when there is a certainty of collection. Only when there is a certainty of collection. Means they may happen at different point of time. They may happen at different point of time. So whenever they are occurring, then it can be included when only when there is a certainty of collection. Means it is what reasonable to expect ultimate collection. Understood? Correct? So that is only given, you can need attention there. Okay. Correct. Now step number 2 is determine the contract cost. Okay, contract cost can be specific cost or allocable cost. It will be specific cost as well as allocable cost. Understood? Correct? Simple. Okay. Then determination of stage of completion, that will depend upon three methods given. However, from exam point we'll use what cost to cost method. Cost to cost method with cost incurred divided by total estimated cost multiplied by 100. Once you have identified stage of completion, then we'll apply this step number 4, calculation of contract profit or loss. So it will be cumulative revenue recognized up to reporting date, less revenue already recognized in prior year. ठीक है ना? So this becomes revenue recognized in current year. From this we can deduct actual cost. This will become profit in the current year. Means here I have given in different way. It is given in different way. So from cumulative revenue only we can deduct revenue from previous year. So that will become revenue of current year. From that we can deduct actual cost. Correct. Then step number 1 is for provision of expected loss in a construction contract. So as per para 35, when it is probable that total cost will exceed total contract revenue, provision for expected loss will be recognized irrespective of whether or not work has commenced. Means even though work has not commenced, we will recognize entire loss. Irrespective of stage of completion of contract and the amount of profit in other contract. Means even though you have some profit in other contract, then also you recognize some loss or provision for this particular contract. How to calculate expected loss, that is given. I think you have understood this also. You first find the total foreseeable loss. From that deduct loss already recognized. This becomes provision for expected loss. Now when the outcome of construction contract cannot be estimated reliably, so revenue should be recognized only to the extent of contract cost incurred of which recovery is probable. That only I have said. Okay. Means contract costs should be recognized as an expense in the period when they are incurred, whether they are recoverable or non-recoverable. So contract cost, entire contract cost will be recognized as an expense. Any expected loss on construction contract should be recognized as an expense immediately. Means I am saying about future non-recoverable cost. Future non-recoverable cost. Chalega? Correct. Then coming disclosure requirement. Disclosure requirement. So what we should disclose? So first we should disclose. I am reading because in this point is important. Right. So we should disclose the contract revenue recognized as revenue. How much revenue has been recognized in current year? Then we should also disclose the method used to determine the contract revenue. For example, percentage of completion method. We should also disclose method used to determine stage of completion, means cost to cost method or survey method, etc. Correct. We should also disclose aggregate costs incurred and recognize profit or loss up to reporting date, means on cumulative basis. On cumulative basis. So cost incurred up to reporting date, profit or loss recognized up to reporting date. Okay. Then we should also disclose any advance received. So if you have received some advance, that need to be disclosed. We should also disclose amount of retention. If some amount has been retained by the customer, so that will be also disclosed separately. Chalega. Then we should disclose two outstanding amount: gross amount due to customer, gross amount due from customer. When I am saying gross amount due from customer, it is an asset. Gross amount due to customer, it is a liability. So how to calculate this amount? This will be contract cost incurred plus recognized profit or minus recognized loss. Whatever profit or loss you have recognized. Correct. So from this amount, after this amount, whatever amount you got, from this you deduct progress billing. Progress billing means bill which has been raised, whether amount has been received or not received. So whatever bill amount has been raised, that is depend upon the contract. So progress billing will be deducted, and this amount will be known as the amount which may be either due from customer or due to customer. Due from customer or due to customer. Means amount is a positive, it is due from customer. If the amount is negative, it is due. is due na to, due to customer. Okay, negative it is due to customer. Make a correction, make a correction. Understood? Have you understood this point? Correct. This last point is what? Segmenting and combining. This may be also asked in exam, combining and segmenting. Now, the topic is what? When to combine two or more than two construction contract as a single construction contract and apply AS7 on that contract. Segmenting means what? One contract when it can be segmented in two or more than two contract and apply AS7 separately. Understood? Suppose you have done three contracts from one customer. Can we combine? That is a question. So what they say, it can be combined when three conditions are satisfied. Correct? First we will do this combination. So a group of construction contracts shall be treated as single construction contract when the group of contract is negotiated as a single package. It is negotiated as single package. Means entire group has been negotiated as single package. The contract are so closely interrelated or interdependent that they are part of a single project only. Means all the contracts are interrelated or interdependent to each other. The contract are performed either concurrently or in a continuous sequence. Means one by one, yeah, together. So they are performed together. So it means it can be combined. It can be combined. Understood? This you need to memorize. Now, construction of each asset shall be treated as separate construction contract if separate proposal have been made for each asset. Separate proposal have been made for each asset. Each asset are subject to separate negotiation. Separate negotiation has been done. And the cost and revenue of each asset can be identified separately. Then only we can apply AS7 separately. Got this point? Yes, sir. So I think this you need to revise. Again, this you need to memorize this point. So a case study based question can be asked whether it will be segmented or combined. Chalega. With this AS7 is also completed. Got this point? Chalega. So we have done AS5, AS9, AS7. Okay, sir. We'll take 5-minute break. After 5 minutes, we'll start. Now, now, can we start once again, everyone? Welcome back. Yeah. Now, last AS was AS 7. AS 7 you have understood. Now let us come to AS 11. AS 11 is what the effect of changes in foreign exchange rate. In this AS 11 there are 3 points. First is what foreign currency transaction. Second is foreign operation. Third is forward exchange contract. Okay. So let us first do foreign currency transaction. So any transaction which is denominated in foreign currency is foreign currency transaction. So any foreign currency transaction require translation in what reporting currency? Reporting currency means Indian currency INR. So the question is that what rate that translation will be done. For that purpose what AS11 says that on initial recognition such transaction will be translated by using transaction rate exchange rate or average rate, whatever given in the question. Whatever given in the question. From exam point of view, whatever given in the question. So exchange rate on rate of transaction or average rate. Normally they give average rate. Because for each transaction it is not possible from examination point of view to give transaction rate exchange rate. But if they have given transaction rate exchange rate, that will be the first preference. If that is not given, then use what? Average rate. Understood? Correct. So initial recognition very simple. Now subsequent recognition, normally subsequent recognition means either on settlement date or on balance sheet date. So on settlement or on reporting date. So what AS11 says that for the purpose of subsequent recognition, all items of assets and liability will be divided into two types: foreign currency monetary item, foreign currency non-monetary item. So if it is a foreign currency monetary item, it will be translated by using closing exchange rate. Closing exchange rate, that will be given in the question. At that rate you need to translate. And if it is foreign currency non-monetary item, and if such item are carried at historical cost, then no translation required. Means you can say translated by using transaction rate exchange rate or initial recognition date exchange rate. Means no translation required on reporting date or settlement date. But if they are carried at fair value, then we'll use the exchange rate when the fair value was determined. So if they are carried at fair value, then exchange rate when the fair value was determined. However, till now they have not asked any question of this nature. So normally in exam if question is silent, always we'll assume foreign currency monetary item are carried at cost and no translation required. Understood is fine? Yes sir. Any difference due to this translation will become exchange difference, and that exchange difference will be transferred to profit and loss account. So it will be transferred to profit and loss account. Now what is the meaning of FCMI or FCNMI? So monetary item are money held assets and liability. Money held means which are in the money form. Means in simple word I will say which are realizable or payable in cash. Which are reliable or payable in cash, that is money held. So which are to be received or paid in fixed or determinable amount of money. Money means money. Money means cash. Cash means currency. Means which are realizable payable. Which are realizable payable in cash equivalent. That is not what? FCMI. Which are realizable payable in the form of goods or services. That are not FCMI. So which are realizable payable in cash, in currency I will say, that become monetary item. And if that monetary item is denominated in foreign currency, that becomes foreign currency monetary item. Correct. So what are non-monetary item? Non-monetary item are assets and liability which are not foreign currency, which are not monetary item. Correct. So in this let us identify which are monetary, which are non-monetary. Can you identify first? For the cash in hand, cash at bank, MI. Cash in hand, MI. Bank loan, MI. FD, MI. Debenture, MI. Expense payable, MI. Prepaid expense, NMI. Why? Because it is an asset but realizable in the form of goods or services. Redeemable preference share capital, MI. Equity share capital, NMI. Investment debenture, MI. Investment equity shares, NMI. Inventory, NMI, PP, intangible asset, investment property, advance from customer, advance to supplier. Understood? Correct? Yes, sir. Now, so can I say we have understood foreign currency transaction? So what we have understood till now is any foreign currency transaction due to translation during subsequent recognition, any difference will be transferred to PL. But there is one exception to this rule, that is para 46A. So para 46A of AS11. So there is one option given to entity for capitalization. So there is an option of capitalization given. Means option has been given. So this option means choice is there. Means entity may either opt or may not opt this option. If they do not opt, then the all exchange difference will be transferred to profit and loss account. But if they opt, then exchange difference may be capitalized, and this option is irrevocable. Irrevocable once exercised, it need to be exercised forever. Means they cannot switch to another option. Understood this point? Correct. Correct. Now this para is not applicable to short-term foreign currency monetary item. Means if there is any short-term foreign currency monetary item, exchange difference will be always transferred to PL. For that, capitalization option is not there. Means this para is applicable only to long-term foreign currency monetary item. Now for the purpose of capitalization, the long-term foreign currency monetary item are of two types. Either it is related to the acquisition of depreciable asset, or it is not related to the acquisition of depreciable asset. Means long-term foreign currency are related to the acquisition of a depreciable asset. If this is the case, so any exchange difference on such foreign currency monetary item will be capitalized. Will be capitalized means exchange loss will be added or exchange gain will be deducted from the cost price of asset, and the revised carrying amount will be depreciated over the remaining useful life of the asset. Understood? Correct. However, if the long-term foreign currency monetary item is not related to the acquisition of depreciable asset, for example, we can say acquisition of land or any other purpose, in that case, any exchange difference on such foreign currency monetary item will be accumulated to a special account. That a special account is known as FCMI TD account, foreign currency monetary item translation difference account. Any balance of foreign currency monetary item will be amortized during the life of foreign currency monetary item on a straight line basis. So suppose you have taken a foreign currency loan of 3 years. So this FCMI balance will be amortized in 3 years on SLM basis over the 3 years. Understood? Correct. Now any balance of foreign currency monetary item, whether positive balance or negative balance, positive balance be credit balance, negative balance be debit balance, will be shown under the head reserve and surplus. Will be shown under the head reserve and surplus. Correct. I think that point I have given as a note. Check kar. If not given, write down. That point I have given as a note. Check kar. Whether any balance of FCMI TD account will be shown under the head reserve and surplus. Write down. Got this point? Chalega? Yes, sir. Then second topic is about foreign operation. That is any balance of FCMI TD account will be shown under the head reserve and surplus. What I have not given in class? Given na? Chalo. Actually it is not mentioned here, so I was doubt that whether I have given or not given. Normally I will give because I am a good teacher. Understood this point? Now coming to foreign operation, second topic. Now foreign operation means what? Foreign operation means what? Any operation which is in foreign country for Indian reporting entity. So it can be either in the form of foreign branch, of foreign subsidiary, of foreign associate, or foreign joint venture. So can you see if there is a foreign operation, so for consolidation purpose we will translate foreign operation, the financial statement of foreign operation as per the currency, reporting currency of Indian reporting entity. So if there is a Indian head office, so we need to consolidate the foreign branch. The foreign branch financial statement required translation as we have done in foreign branch chapter in branch accounting. Similarly, if there is a foreign, if suppose there is an Indian parent company and foreign subsidiary, that also require consolidation. So their financial statement require what? Translation. So what would be the translation rule? So for translation rule, all foreign operations are two types. One is known as integral foreign operation. Second is known as non-integral foreign operation. Integral foreign operation means the foreign operation are integral part of Indian reporting entity. Non-integral means which are not an integral part. So sir, how will identify it is IFO or NIFO? So they have given some factor for identification of NIFO. They have given some factor for identification NIFO. NIFO means what? Non-integral foreign operation. So what they say, the foreign operations which are not integral are called non-integral foreign operation. Indicator of NIFO. If any one condition, sorry, what they say, these are the factor to identify NIFO. So what they are saying, foreign operations are carried independently without much dependence on reporting entity. Means it is independent. So in simple what I will say, integral foreign operations are dependent on reporting entity and NIFO are not dependent on reporting entity, Indian reporting entity. Second, there are very few transactions with reporting entity. This is an indicator. There is no dependency. There are very few transactions. Foreign operation raise finance independence is an indicator of independence. There is an active local sale market for foreign operation product, means they can sell the product individually, independently, indicator of independence. All the expenses of foreign operation product or services are primarily paid or settled in the local currency rather than reporting currency, means they can settle all their expenses in their own currency, indicator of independence. So these are the some indicator for independence they have given. If this indicator exists, so this become NIFO, otherwise become IFO. So this indicator may be important from MCQ's question point of view. Correct? Yes, sir. Now, if it is IFO, what is the translation rule? Now, from exam point, this is important because these rules we applied for foreign branch translation. Correct? So, what are the rules for any non-monetary item? Non-monetary item. Example: fixed asset investment. If carried at cost, then transaction date exchange rate. If carried fair value, then revaluation date exchange rate. But can I say if question is silent, we'll assume what? If question is silent, we'll assume what? Transaction date exchange rate. Then question will be silent only. Right. Now for accumulated depreciation rate used for the translation of fixed asset. For monetary item, always we'll use closing exchange rate. For revenue item, we'll use transaction date exchange rate or average rate, but in exam they will give only average rate. For opening stock, we'll use opening rate, and for closing stock, normally if they are carried as cost, it will be transaction date exchange rate. But if they are carried at NRB, then closing exchange rate. So in this, we'll always assume what? From exam point, we'll assume it is closing exchange rate. This is the assumption we have taken. And always we'll assume this only if the question is silent. So normally in branch chapter we use word closing exchange rate. So we have taken one assumption that closing stock are valued at NRB. Any difference due to such translation will be transferred to PL account. Means any exchange difference will be transferred to PL account. Understood? Correct? But if it is NIFO, the rules become thoda simple. If it is NIFO, so all asset, all liability, whether monetary, non-monetary, will be translated by using closing exchange rate. Income and expense or revenue item will be translated by using transaction date exchange rate or average rate. Only this is the rule. Correct. Equity, it will be transaction date exchange rate. Any difference will be transferred to a special account known as FCTR, foreign currency translation reserve account. So any difference will be transferred to FCTR, which will be transferred to PL on disposal of such foreign operation. When the foreign operation is disposed of, then FCTR will be transferred to PL. Understood? This is the point. So you need to only remember this FCTR. Correct? And the rate is very simple now. So be careful if there is a given NIFO, then you need to apply the rules of NIFO only. But if question is silent, always apply the rules of IFO. Understood? Chalega? Yes, sir. Then changes in the classification of foreign operations. So sometime what happens, IFO may become NIFO or NIFO may become IFO. So IFO become NIFO So from the date of classification, we'll apply what? NIFO rules. Correct now. So what first I said, what NIFO become? Sorry, IFO become NIFO. So exchange difference should be transferred to FCTR from the date of change. From date of change. But if NIFO become IFO, so there will be some balance of FCTR that will remain in that balance only. Understood? Correct. And from the date of change, entire exchange difference will be transferred to PL. And the balance will be means FCTR balance will be transferred to PL only on disposal of FO. Correct. So exchange difference will be transferred to PL from the date of change. The balance of FCTR will remain in balance till the date of sale. Means only on sale it will be transferred from FCTR to PL. Chalega. So this can be also important from exam point of view. Reclassification. The last point is forward exchange contract. We have done discussion about this in class. Any contract which is settled on future date is known as forward rate. Forward contract. And if that contract is done in foreign currency, that becomes forward exchange contract. Understood? Suppose you have done one contract to buy $10,000. Today you have done contract, but we will actually buy after 3 months. So that becomes forward exchange contract. Forward exchange contract means it is as simple as executory contract, which will be settled on future date. So I can say in this way, any executory contract in foreign currency is what forward exchange contract. Now from accounting treatment point of view, this can be of two types. Forward exchange contract for managing risk, a forward exchange contract for generating speculative income, or we can say held for the purpose of trading. So if it is for managing risk, you remember to manage the risk. So in that case, we'll find out the amount of premium. We'll compare forward rate with spot rate. Any difference will be known as premium. Premium multiplied by unit of currency, that will become total premium, and this total premium will be amortized in PL over the life of the contract. Suppose you have done one contract to buy $1 lakh at rupees 65, $1 lakh at rupees 85, $1 lakh at rupees 85. This becomes forward rate. But currently spot rate is 80. So how much premium you have paid? 5. For how much dollar? $1 lakh. So 1 lakh into 5, 5 lakh. This 5 lakh, suppose the life of the contract is 3 months. So this will be amortized in how many months? 3 months. From examination point of view, out of that 3 months, some month will be in previous financial year, some month will be in the next financial year. So amortize on that basis. Correct? Yes, sir. So I hope you have understood this. Simple. So premium or discount arising at inception of such forward exchange contracts should be amortized as an expense or income over the life of contract. Normally it will give always premium, because forward rate will be always more than what? Spot rate. So discount will not be given the question. But suppose discount is there, so discount kar do. Then discount will be again. Understood? But when forward exchange contract entered is for trading or speculation, then we recognize gain or loss. Correct. Then what they will do? They will give you the forward rate at each reporting date. For example, you have done contract on 1/1, and this is for 6 months. So 31st March will come, and this is 30th June. This 6 months. So they will give you forward rate यहाँ पर. They will give forward rate यहाँ पर, and on this spot rate will only become forward rate. So suppose this is $1 lakh you have entered at rupees 85, but here it become 87, and here it become 89. So this become gain. Gain is how much? 2. 2 into what? 1 lakh. This become gain of what? This year. Correct. Then this become what? 2 into 1 lakh. Again this will become gain of this period. Understood? So that will be given the question, you can easily identify. Correct. So there are 2 questions given. That 2 questions, out of that 2 questions, 1 question may be asked in exam. So do that question before going to exam hall. So this is थोड़ा सा I will say final level वाला point, but they are asking this type of question in exam, so just do and go in exam hall. चलेगा? Yes, sir. With this, we completed what? Yes, sir. Disclosure you can read. AS11 also done. Yes, sir. Come to now AS18. Now, AS18 is for what? Related party disclosure. So there are 3 points which we need to understand. First, what is the related party relationship? Second is what? Related party transaction. And then last is what? Disclosure requirement. So first, how to identify related party relationship? So what AS18 says that parties are related, parties are considered a related party if at any point of time during the year, one party has the ability to control the other party, or one party has the ability to exercise significant influence over other party. Now you know the meaning of control and significant influence, because that we have done in AS21 and AS23. Understood? So I am not going to the definition of control or significant influence right now. Correct. So what is that? Parties are considered to be related if at any time during the reporting period one party has the ability to control the other party, or one party has the ability to exercise significant influence over other party. So this will be, the other party will become the related party. Now of course control, what they have said, one party has the ability to control the other party if such party has ownership directly or indirectly of more than 50% of voting power, of more than 50% of voting power of the entity, or has control over the composition of the corresponding governing body of other entity. I think these 2 points we have done in AS21 also. So with these 2 points, can you see it will become also subsidiary? Means other party, other entity will become subsidiary. Understood what I am saying? Correct. But they have given one more point for what? Control definition, but this is related only for AS18, not for AS21. A substantial interest in the voting power and the power to direct the financial and operating policies of the entity. Substantial interest means what? More than 20% but less than 50%. And they have also power to direct the financial and operating policy. Means when I say significant influence, in significant influence also it is more than 20% but less than 50%. But in that case they have only power to participate. But here they have power to direct. But sometimes what happens, if you, even though you are holding less than what? 50%, but then also you may have some decision making power. If you have done decision making power, it means you can take, you have the control. Means they want to include joint control in this case. Means can I say with this, any party, suppose you are holding, just try to understand, I have the control. So with this A and B, the control aa gaya. But if suppose we have a contractual agreement, means two party have a contractual agreement holding what? 40%, and they have joint control. So even though they are holding less than 50%, they can take decision or not? They can take the decision. So they want to include joint control with this. So for this AS18, control and joint control are same. Control and joint control are same. Are you able to understand what I am saying? Correct. So that is the B point. Means point number C for this chapter will also give the ability to control. Ability to control. Then significant influence means one party has the ability to exercise significant influence over other party when such party has the ability to participate in the financial and operating policy of the entity. So you can see here the word was power to direct. Here the word is power to participate, ability to participate. Correct. Understood. Then this point you know that significant influence is presumed if the investing party directly or indirectly hold 20% more than 20% of voting right of the entity. Now coming to related party relationship, this is important. So this is para number 3. How many paras are there? 3 A B C D. 3 A B C D. So in exam, if you give answer in para form, it will be thoda sa impressive. But don't give wrong para. If you don't remember para, write down only para 3. Don't write down para 3 A B C if you don't remember it. Para 3 to yaad rahega. So any relationship is given in para 3. The first is what? First relationship, enterprise that is directly or indirectly through one or more subsidiaries control the reporting entity. Control the reporting entity means subsidiary. Are controlled by the reporting entity means control the reporting entity means parent company. Are controlled by the reporting entity means subsidiary company, or under the common control means fellow subsidiary. Means they want to say in point number A, any group companies means if I say P has S1, S2, S2 has what? S3, S4. This may have S5. So in this, all entities are related to each other. All entities are related to each other. So it will include parent company, subsidiary, and they have fellow subsidiary also. Fellow subsidiary means what? Two entities which are under the common control. Two subsidiaries which are under the common control. Correct? So control the reporting entity, are controlled by the reporting entity, and are under the common control of the reporting entity. Chalega? Yes, sir. Second, point number B. Any associate and joint venture. Now you know the meaning of associate, you know the meaning of joint venture. So I am not going to that meaning. Any associate, any joint venture of reporting entity and the investing party or the venturer in respect of which reporting entity is an associate or joint venture. Means in simple way, if I am saying there is one investor who has an associate, so both are related to each other. Means for investor, associate is related. For associate, investor is related. Similarly, a joint venturer has a joint venture. So both are related to each other. Means for venturer, joint venture is related. For joint venture, venture is related. So always relationship is two way. If one is related to other is also related. Correct? Yes, sir. Then third party is what? Individual that control or exercise significant influence over the entity and relative of any such individual. Understood? Means can I say point number A and B is related is for entities, means when the entities can be related parties, and point number C and D is for individual, when individual can be related parties. So any individual which control, means suppose Mr. Ram control Ram Limited. So for Ram Limited, Mr. Ram is what? And plus his relative, plus all his relative will be also what? Related parties. So any individual which control or has significant influence over reporting entity and their relative will be related parties. So if I say Mr. Ram has a significant influence over Ram Limited, then also Mr. Ram is also a related party plus his relative. Understood? Simple. Correct. Point number D is what? KMP of any entity and the related relative of such KMP. So any key manager person of any reporting entity will be also related party with their what? Relative. What do you mean by relative? Relative means what? Spouse, son, daughter, parent, mother, father, brother, sister. This is the meaning of relative. Correct? Yes, sir. The last point is what? Entity over which any person described in C and D is able to exercise significant influence. Significant influence will means, can I say control will include significant influence? So when I am saying exercise significant influence, so automatically control will be also included, because control include what? Significant influence. So is able to exercise significant influence or control, that is what? Hidden. Correct. So what they want to say? Suppose Mr. Ram has control over Ram Limited, and Mr. Ram control or has a significant influence over Sita Limited. So for Ram Limited, Sita Limited is what? Related party. So you can see any person which has been identified in above para is able to control or able to exercise significant influence over what? Sita Limited. So for Ram Limited, Sita Limited is what? Related party. Understood? So any entity over which person described in C and D above is able to exercise significant influence, so that entity will become related party to reporting entity. Understood? So these are covered in related party relationship. Apart from this, other relationship will not be counted. Means if there is any other relationship that will not covered under this chapter. Understood this point? Therefore, they have given some clarification. These are excluded from the purview of related party relationship. Means two entities which are under common control. Two entities which have a common director, a common KMP are not related party. So two entities are not related parties simply because they have a common director. They are not related parties. Means Mukesh Ambani is the director of two companies. So whether their two companies are related? No. Only because they have a common director. Means if Mukesh Ambani is controlling one company, then it can be. Means it can be a possible situation. Means suppose Mr. Ram या Mukesh Ambani control Reliance Industry Limited, and Mukesh Ambani is a KMP of X Limited. Then can I say this Mukesh Ambani is already identified as a related party for Reliance Industry Limited and is able to उल्टा कर दिया सर तो KMP करो, this is KMP, and able to control us has a significant influence over X Limited, then this is what? Related party. Understood this point? Correct. Now, any single customer, single supplier, single franchisor, single distributor or general agent with whom enterprise do a significant volume of transaction are not related parties. Then party listed below, for example, provider of finance, trade union, public utility, government department and their agencies are not related party. These are the clarification given. Next point. Circumstances under which disclosure requirement of AS 18 are not applicable. So they have given some circumstances under which AS 18 is not applicable. Disclosure regarding AS 18 is not applicable. So first, when providing such disclosure would conflict with the duties of confidentiality. For example, bank has one customer and that customer is KMP of the bank. So can the bank for their customer has a duty of confidentiality. They should not disclose any transaction of their customer until it's legally required. Suppose I have a bank account. So whether my bank will give you the information about my transaction? No, because they need to follow the duty of confidentiality. So in that regard, can I say bank should not disclose that information to anyone? So these transactions are not supposed to disclose. These are exempted from AS 18. In respect of intra-group transaction in consolidated financial statement, can I say in consolidated financial statement, any intra-group transaction between parent and subsidiary will be eliminated and that will become a single entity. So these transactions are not supposed to be disclosed in CFS, in consolidated financial statement. No disclosure is required in the financial statement of a state control entity as regard with the transaction with other state control entity. Means there are two government companies, so they are related to each other because they are controlled by the same government. So any transaction between that two government companies are exempted from the disclosure given in the AS 18. Correct. So these are a special exemption given under special circumstances. So what are the disclosure requirement that we need to understand? But before that, what is the meaning of related party transaction? So any transaction which result in transfer resource or obligation or services between reporting entity and related party, correct, whether the price has been charged or not charged will be related party transaction. So they have given one clarification that even the price has been charged and price is adequate, then also it will be related party transaction. Understood? Price has not been charged, then also it will be what? Related party transaction. चलेगा. Disclosure. So disclosure has been divided in two parts. When the control exists but the transaction does not exist. So whenever control exists but transaction is not there, there is no transaction, there is no related party transaction, then also some disclosure is required. For example, name of related party and nature of related party relationship. These two disclosures are required. But when control exists, sorry, when there are related party transaction, correct? Whenever they are related party transaction, then following disclosures are required, correct? So what are disclosures required? The name of related party, nature of relationship, nature of transaction, the volume of transaction, any other element of related party transaction, whether it is adequate or inadequate, or price has been charged or not charged, the amount of outstanding balance from such related party at balance sheet date, or any provision for doubtful debt due from such related party, or amount written off in the period in respect of debt outstanding from that due from related party. So if suppose any amount has been charged to PL in respect of debt due from related party, should be also disclosed. So these are the disclosure requirements. Can you repeat with me? First is the name of related party. Second is nature of relationship, the nature of related party transaction, then volume of transaction, then amount of outstanding balance, or any other element of related party transaction, then amount of outstanding balance, or any provision for doubtful debt in respect of that amount due, and the last is what? Any expenses which have been charged to period in the period for the amount due from related party. Understood? These are the disclosure requirements. This is important from exam point of view, because if they have given any question, so you should disclose this all the points. So this disclosure, because chapter is only disclosure, na? So disclosure become important. Understood? So this become related party relationship. Chalega. Understood? So AS 18 is also over. Then AS 25. Interim financial reporting. Interim financial reporting. Interim is what? Interim period means what? Less than 12 months. So if you are preparing any financial statement for less than 12 months, it become what? Interim financial statement. And when you report, it become interim financial report. Understood? Interim financial report. So interim financial report means any financial report for an interim period. Any financial report for an interim period. Interim period is a financial reporting period for less than a full financial year. But one clarification has been given that first financial statement can be for less than 12 months. So that is not interim financial report. The first annual financial statement can be for less than 12 months. So that is not interim financial report. But any subsequent financial report, if it is for less than 12 months, it become what? Interim financial report. So interim financial report may contain either complete set of financial statement, or it may contain condensed set of financial statement. This option has been given. Either it may contain complete or condensed. However, annual financial statement will be always complete, cannot be condensed. Understood? So when I am saying interim financial report, so complete means complete balance sheet, complete statement of PL, complete statement of cash flow, complete notes to account. But when I say condensed, it is condensed balance sheet, condensed statement of PL, condensed statement of cash flow, and selected explanatory notes. This you can delete. It's okay is for actually final level. Statement of changes in equity. ठीक है, इसको हटा दो. This much you understood? Correct? Okay. Now, form and content of interim financial report means what will be the content of interim financial report? That depend upon whether you are preparing complete set or condensed set of financial statement. When you are preparing complete set of financial statement, so AS 25 do not encourage it. but they have given an option. If you are preparing complete set of financial statement, what they said is to be prepared in the same format as per the same content as per the annual financial statement. Means you can't do any deletion, any addition. It should be prepared as per the same content and same format as you are preparing your annual financial statement. Correct now? So it should be prepared in and present in same format as per the same content required for annual financial statement. And of course, we should apply the same accounting policy. Same accounting policy should be also applied. But if it is condensed set of financial statement, so only we should provide a statement should include only heading and subtotal included in the most recent annual financial statement. Mean directly you can add on non-current asset total, current asset total. Only heading and total is required. Means there is no need to write down non-current asset, PP, etc. Only heading and total you can write down. Correct. However, additional line items should be included if their omission may mislead the true and fair view of financial statement. So if they give some misleading information, then additional line item is required. So if you think that PP is required, we can give you PP etc. in non-current asset. However, in this they have given one clarification that basic and diluted earning per share should be disclosed in interim financial report also. Correct. This is important. They will ask you whether it is required or not. But yes, it is required, even though it is condensed set of financial statement. Understood? Correct. This minimum information means we need to also disclose the selected explanatory note. So what are the minimum information which is required to disclose that you read by your own? This I don't think so is important. They will not ask this type of question. But just read it. There are 10 points. Just read it by your own. Now, next point is what? Period for which interim financial statement are required to be presented. So that depends upon whether the business is of seasonal nature or non-seasonal nature. So first we'll do for non-seasonal business. So what are the how many is the period for which financial statement are prepared? That depends upon seasonal and non-seasonal. The first we are doing what? Non-seasonal. Correct. Let us assume that we are preparing quarterly interim financial report. I hope you are understanding. Correct. And this is our current interim period. QT is our current interim period. QT. Quarter 2. So what they say, balance sheet, we need to prepare two balance sheet. One is balance sheet as on quarter 2 end, and one is balance sheet as on previous year end. So two balance sheet. Means there is no need to prepare what is balance sheet, if it is non-seasonal. Then we need to prepare two SOPL. We need to prepare, sorry. We need to prepare 4 SOPL. 4 SOPL. One is for the current quarter and the corresponding previous year quarter. Means Q2 and Q2. And one we need to prepare SOPL from year to end. We call it what? Year to end. And a corresponding SOPL from year to end of previous year. Then we need to prepare two statement of cash flow. Two statement of cash flow, that is year to end and year to end. Understood? Have you understood this point? Correct. This is for non-seasonal. But if we become seasonal, so we need to add some more. See, non-seasonal, you understood? If it becomes seasonal, so we need to prepare 3 balance sheet. So one more will be added. This will be also added. Understood? Then 6 SOPL. This 4th will be there. Then 12-month ending and corresponding 12-month ending of previous year up to the quarter end. Then 4 SOKE, this 12-month ending and this 12-month ending. Understood? When it is seasonal, whenever question is silent, give for non-seasonal. If a question is silent, so always apply non-seasonal. Don't give seasonal wala point. Okay, na? If question is silent, then go for what? Non-seasonal. Understood what I am saying? But in exam you should write down in this way, as is given in the book. Understood? Balance sheet, as at this date, statement appears 6 month ending, 3 month ending, 6 month ending, 3 month ending, 6 month ending, 3 month ending. Here it will be 6 month, 3 month, 12 month ending. Correct? In this way you write down. Chalega? Yes, sir. However, till now this type of question has not been asked, so not so important. But can be, I am saying not so important, it does not mean it cannot be answered. Sometimes I say not important and that question is only asked. ठीक है ना, जवान बड़ा काला है मेरा. I say not important and that is asked. In my entire life, I have in CA final now, in my CA final, entire study, I have left only one topic. I said, nahi aayega yaar. Means I have done entire, I have never done selective study. Only one topic in audit I have left, and that topic was asked for 10 marks in exam. Batao. Means I left only one topic in my exam that was asked for 10 marks. So whatever I leave, that only the exam mein aayega. Correct na? So normally I don't leave anything. So if I am saying not so important, does not mean it will not come. It may come, huh? The next point is about recognition and measurement of income tax. This is important from exam point of view. So what they say, first calculate effective tax rate. First calculate effective tax rate for the entire year. For that you need to first estimate the accounting income of the entire year. Then estimate the tax expense of that year. Estimate the tax expense of that year. So effective tax rate will be estimated tax expense divided by estimated accounting income. Accounting income is PBT, profit before tax. Correct now? Into 100. That will become what? What? Estimated weighted average tax rate or effective tax rate. Understood? What is the formula? Estimated total tax expense. Total tax expense is current tax plus deferred tax, current tax plus minus deferred tax, divided by total estimated accounting income of current year. So this will be of course given in the question, and you can calculate effective tax rate. That effective tax rate apply to the accounting income of each quarter or each interim period. Correct? So accounting income of each interim period multiplied by effective tax rate. Effective tax rate. For example, normally they ask this type of question. Suppose they will give Q1, Q2, Q3, Q4. Correct? They will give 1000 income, 2000 income, 300 income, 3000 income, 500 income. Total income how much? 6500. This become accounting income. Correct? Understood? Correct. Then they may give some expense disallowed in current year. Suppose the expense disallowed is 100. Correct. And they may give some brought forward losses. For example, 2000 they can brought forward losses, and they will say for which DTA was not recognized earlier. You remember this type of question? And they will give you tax rate 30%. Correct. So what is my total accounting income? 6500. So first we need to find out current tax and deferred tax. We will disallow what? Expense disallowed. We will add back now. How much? 100. Correct. It will become 6600. Then we'll do minus what? Brought forward losses, which will be set off 2000. So this become how much? 4600. So on this we'll calculate current tax at what rate? 30%. How much? 4600 into 30%. How much? 1380. Correct. Now can you see we'll calculate deferred tax? तो बताओ on expense which is disallowed right now, will calculate DTA or DTL? DTA. So expense disallowed which will be allowed in future. So when it will be allowed in future, we are saving tax or we are paying tax? In future am I saying? We are saving tax. So it is a tax benefit or tax payable? Tax benefit. So tax we are saving, so it means we need to recognize deferred tax asset. So can this become deferred tax asset? At what rate? 30%. How much? 100 into 30%. How much? So this will be plus ki minus? Minus. So DTA created means DTA income. Correct. Now for brought forward losses, DTA was not recognized earlier. So if DTA was not recognized earlier, there is no question reversing it, and therefore no reversal will be done for this point. I think this type of question we have done in the class. So this become how much? 4600 minus 1380 minus 30. So 1350. So what will be your effective tax rate? Effective tax rate 1350 divided by accounting income. What is the accounting income? 6500. So 1350 divided by 6500. How much? 20.76%. So this become your effective tax rate. Now this effective tax rate will be applied on what? This applied on this, and that will become what? Tax expense of each quarter. Can you apply? Yes, we can apply. Understood. So this type of question can be asked. Normally in exam I have seen they don't give this expense allowed or disallowed. They will give this and they will give brought forward loss, for which DTA was not recognized earlier. So ignore this, then deferred tax will be 0. Then can I say current tax will only become tax expense? But if they are given expense allowed or disallowed, be careful. You need to also think about deferred tax. So they are not giving that type of question. Are you getting what I am saying? Or sometimes they will give the directly effective tax rate, only multiplied in accounting income. If they have given effective tax rate, chalega? Yes. Sir. So this also you have understood. Now recognition of revenue and expenses can be also one important question. How to recognize revenue and how to recognize expense. So what AS 25 says that there are many revenue of seasonal nature or revenue which are occasional nature. So that revenue should be recognized. The revenue should be recognized in the period in which they are earned. Means it should not be anticipated deferred. It should not be anticipated or deferred. Are you getting what I am saying? If their anticipation or deferment cannot be done at the end of accounting year. So what they are saying? Revenue that are received seasonally or occasionally within a financial year should not be anticipated or deferred. Means should be recognized only in the year in which they are earned. So should not be anticipated or should not be deferred. If anticipation and deferred would not be appropriate at the end of entity's financial year. For example, can you defer or can you anticipate any dividend income? No. So if you receive dividend income in second quarter, it should be recognized in second quarter only. Are you getting what I am saying? Are we able to understand what I am saying? But can I say government grant can be deferred? Government grant can be deferred. So if you have received government grant in second quarter, so it can be deferred. It can be deferred because it can be deferred at the end of financial year. At the end of financial year. Understood? Correct. For example, dividend income, royalty income, uneven sales cannot be anticipated or deferred. For example, government grant received can be deferred if treated as a deferred income as per AS 12. Similar point they have given for expense. See, any expense or cost that are incurred unevenly during the financial year should be anticipated deferred if the anticipation or deferment can be done at the end of financial year. Means it should not be also anticipated deferred if the anticipation or deferment cannot be done at the end of financial year. Are you getting? For example, can you defer any advertisement expense? No. Therefore, advertisement expense which you have incurred for the entire year in second quarter, Can you proportionately, can you recognize on a proportionate basis? No, because they cannot be any anticipation, they cannot be a deferment of such expense. It will recognize in the quarter in which they are incurred. But if I say provision for gratuity, so of course can is the provision for gratuity we recognize on anticipation basis. So for second quarter, if there is some gratuity, we should recognize the provision for gratuity also. Understood what I am saying? Correct. So that is only given. Example: advertisement expense, commission expense, bad debt should not be anticipated deferred. However, provision for gratuity or any deferred loss in case of sale and leaseback transaction can be also deferred at the end of financial year. So it can be anticipated or deferred. Correct. Then last point they have given key any cost which do not meet the definition of asset. Yeah, which do not meet the recognition criteria should not be recognized as an asset. For example, development expenditure condition not satisfied in third quarter, but condition satisfied in fourth quarter. Can we recognize as an intangible asset in third quarter? No. Correct, because it does not meet the recognition criteria in third quarter. Correct. So cost that does not meet the definition of asset at the end of interim period should not be deferred. It should not be deferred means it should not be capitalized. It should not be capitalized. Then changes in accounting policy. Changes in accounting policy. Now whenever there is changes in accounting policy for a particular quarter, so we know that for changes in accounting policy we apply retrospective effect. Correct. Now I'll just give an example. Suppose this is quarter 1, this is quarter 2, and we have done changes in accounting policy in quarter 2. Correct. Now because of that changes in accounting policy, quarter 1 100 expense increases by 100 and quarter 2 expense increases by 200. So what is the total expense? 300. So this 300 should be recognized in quarter 2. The 200 should be recognized only in quarter 2. Only 200 because we do retrospective accounting. So 100 relate to what? This quarter. This should be charged to the profit and loss of this quarter. Understood? So only 200 will be recognized in quarter 2. But if it is changes in accounting estimate, then we do on prospective basis. Then entire effect will be given in the quarter 2 in which the changes has been done. This is very important point which can be asked in exam. The effect of changes in accounting policy related to current interim period should be recognized in the PL of current interim period. Understood? So only 200 will be recognized in quarter 2. But if it is changes in accounting estimate, the entire 300 will be recognized in quarter 2. Understood this point? The entire effect of changes in accounting estimate should be recognized in the PL of interim period in which changes has been made. This is very important point. Got this point? These 2 points understood? Correct? Have you understood this point? Batao. Changes in inventory valuation. It is changes in accounting policy or changes in accounting estimate. Inventory valuation. Means P4 to weighted average. Changes in depreciation method. Pakka. Chalo, understood. Because they will ask these 2 only. There are some questions which I know they will ask that much only. Correct now. So there are some questions which I know this is only the question. So there are some questions given in ICAI study method that question will be asked. Only you retain that concept in exam hall. Are you getting what I am saying? So for AS now they will not go beyond what? I mean there are some AS which may go beyond ICAI study method. For example AS 9 they can create good question. AS 10 they can create good question. Means whatever chapters I have given in volume 1 now, for that they can create good question. But whatever in volume 3 now, believe me they will ask dot to dot question from ICAI study material. Volume 3 wala. AS 25 they will not change. AS 24 they will not. They will change the number and company name. AS 19 they will not much change. Correct now. So 4 or 5 questions are there. The question will revolve around that. So it means concentrate on question book, question bank. If you can do that much, so ho gaya na. And whatever question you find difficulty means you are thinking that this question you are not able to understand taking more time, just write on MRQ. Just do before exam. And that will be, I will say, 12 to 15% of questions. Means out of 100 questions, 15 questions will be of that type. It means before exam, can I say we can revise 15 questions? Before exam does not mean entire 4 days. Just before exam, 1 hour before, 2 hours before. Then 2 hours before we think what to study, what not to study. Just write on MRQ, MRQ, MRQ in that question. Can I say that type of question can be revised in last 2 hours, 3 hours? When you have done entire revision, that time I am saying, and suppose same to same question comes, so two advantage. Can you see you are saving some time to reading time become less, and then solving time become less. Because you know what is given the question. Got this. So that question you need to identify. I have also identified many questions of that nature. But some question you also identify. But not all questions. Some will mark you. Then it will be difficult. Which you think, yes, this question requires special attention in that question. And if suppose there is one question in that one para require attention, don't give entire question as I mark you. That one para write down somewhere. This require attention. So there is no need to read the entire question. Na? Only one para require attention. So that para, that sentence need to be understood before exam. Sometimes what happens, information you are not able to understood. So just write down question number 1, highlighted point, read before exam. Because if you are not able to understand by one, so it is quite possible that in exam also you are not able to understand. So that you need to do smart work. How to revise entire syllabus before exam is also one task. Have a advanced accounting that you can do because it's first paper. But what about other subjects? So 1.5 days में entire compilation करना है. So for that this method is very important. Agreeing. So each subject is important. In each subject you need to score what? More than 50. Correct. So for that each subject need to be fully prepared. Understood? Got this point? So this much only I think हो गया. You want me to do any more AS? But today theoretical ज़्यादा हो गया. Okay, but I think you have understood. Let me identify which AS will do tomorrow. Have you done any question? Have you any doubt in any questions? So we have done AS1, so it does not require revision, but I will do it. AS1, that one AS1, AS3, AS3 एक बार छोड़ दो. AS4, AS5, AS7 done, AS9 done, AS10 done, AS11, 12, 13, 15. I done AS15, 22, 23, 27. 27. How many AS? 5 हो गया, including AS3. So I think this 5 will do first. Then if time permit, will do AS3. Huh? Only AS3 is left, na? No, only AS3 is left. AS27 I have said. AS23 I have said. 14 तो chapter है. AS14 and AS21 is not included. The amalgamation is a total chapter that I revise from chapter point of view. Only if there are some complication in chapter that also I need to revise. ठीक है ना? So first I will do this 5, then we will think about other. ठीक है ना? Okay. So tomorrow we'll meet. Thank you very much. Till then, bye bye. Take care. Enjoy your remaining day. Bye bye.